Greetings to you. I just thought I'd share a few things with you. Back in the late 1970s and the early 1980s, the geopolitical military globe was looking not that dissimilar from the way it's looking now. There was trouble in the Middle East, there was trouble with oil prices, there was trouble with public spending, in the Western Hemisphere, in this country in particular, but also the United States. Paper money was in trouble, the pound as usual was in trouble, so on and so forth. I was alive in those times, and I was active professionally, although quite junior, so I didn't have complete command of what I could invest in and what I couldn't invest in. It was all part of a sort of an overall blob, as it were. But it was interesting that we had these problems, and it seems to be they're manifesting themselves in a rather mutated way just at the moment. And I was giving a lecture, it was about a decade ago now, and I actually raised the late 1970s and 1980s to a group of American students who'd come across the University of Syracuse, I think it was, or something anyway. It was in Strasbourg. And they were all sitting there, and I said, can anybody tell me, they were economics students, I said, can anybody tell me what happened in the 1970s, the second half of the 1970s and the beginning of the 1980s? Because obviously most of these youngsters, and even youngsters today in the city of Wall Street, get their information from books and graphics and so on and so forth. Anyway, I threw this question out, can anybody tell me? And there was a dead silence to start with. There was a bright young fellow in the front row, gave me a very American answer, which I rather liked because it amused me, and I like some of these American expressions. So I said, what happened in the late 1970s and the early 1980s in the financial markets? And he looked at me in the front row and he said, hey, Mr. Bloom, a whole load of crazy shit went down. I've never heard it better expressed. Bond yields went up to the late teens. So when bond prices collapse, because bond yields go up, but the capital value of bonds go down, as we are seeing now. We're also seeing lots of other things. And I took a bet on, a very modest bet, because I wasn't allowed to do more than a few percentage in my fund that I was running at the time. And I took what I thought was quite an aggressive bet in a unit trust. In a unit trust, it was M&G Gold in General. M&G Gold in General, late 70s, early 80s. It went up somewhere in the region of 2,500% in 1 year. In 1 year. That is an extraordinary, unprecedented figure. And it blew off a bit later. Now, the point that I'm making here is that we are seeing so much is so similar just at the moment since the beginning of this year. We've seen a blow off at the top as far as gold prices are concerned, but we're seeing the same geopolitical dynamics. We're seeing the United States going broke, the forever wars, so on and so forth. We're seeing all this, and of course we've now got yet another socialist government, of course, very seriously socialist government that we had in the 1970s. And of course, if you do your history back when I was a very young fellow running around with a train set or something, in the 1950s, the post-war government under Clem Attlee, who spend money like water, and they don't know where it's coming from because they don't understand economics or the commercial world. Now, I believe we're going into that again. It's a question of timing. Will it happen this year? Will it happen next year? Well, I don't know. In the the late 1990s, I made such money as I made, or such money as I had, which wasn't a lot actually, considering, because I was a big spender. In those days, it was a secular bull run on equities throughout the 90s. And I rode it high, and I rode it well. I rode it quite well. You might say, well, you were lucky. Well, yeah, you could argue that too. So I'm not going to dispute that. Notwithstanding that, I did very well. Now, I got to 1999, and I didn't like the way things were going. I didn't like the way things were going with government spending. I didn't like it geopolitically as far as the United Kingdom were concerned. And I decided that I made my money in equities, and it was time to consolidate the wealth. I suppose I would have been about mid-50s, late 50s or something like that. I don't know. And so I then switched to gold in specie. At that stage, that would have been about 1999, because I was prompted by Gordon Brown selling gold. And I used to regard and still do Gordon Brown as a complete and total muppet. And if he was selling, I thought, Bloom, you ought to be buying. And I did. And I've been buying ever since. And it's interesting that gold in specie has outperformed all the equity indices since that time. In the last 25 years, it's done extremely well. I'm still very bullish because I think we're in a secular bull market for gold. You get pauses, you get corrections, and we've just had a big one. And history will show you that when you've had a really significant correction in what is a secular bull market, it's a very good buying opportunity. I believe we have a buying opportunity today, at the moment. Bear in mind that gold is not an investment; it's a strategic reserve holding, which over the long term does you extremely well, and 2,000 years of history shows you that. You only should be buying gold if you can stick it in a bottom drawer, or stick it in a safe, or stick it somewhere and totally forget about it for at least 5 or 6 years. Don't buy it for Christmas. Don't buy it for Christmas. Buy it, stuff in the bottom drawer and forget all about it. That's what it's there for, and it's a reserve. Interesting enough, that's what it's doing its job today in a certain way. We're seeing the geopolitical situation, military situation, threaten in the Eastern Mediterranean. And so Turkey, which was buying gold in very big style, have unwound some of their gold positions, not because they don't have faith in gold in itself. They've unwound them because they're now building up their military and their naval presence in the Eastern Mediterranean in order to counterbalance what's going on there, as you all know. So there we are. That's the situation as it is. So I think what we've got now is the second leg of a secular bull market, which in gold, which I think will last some time. Not because gold is going up, and goodness knows how many times I've said this. And if you look at my interviews with people like Alistair McLeod and people of that nature, you'll see it's paper money is going down. Paper money is going down. So you don't actually make money on gold; you just preserve and freeze the wealth that you've made. That's the game. And that works over 5-year periods, and you can just go back historically. That is as far back as you like. And that's the situation. Now, my chum, I think I'm calling him my chum, young Nick Ward, is coming on later on today. He's just been doing a bit of globe trotting. And he's going, you cannot beat when you're actually doing this kind of work, and I did it for a very long time. It was in equities and bonds. You have to go and talk to people face to face across the globe. You really do, because you've got to get to feel. You can't get it from a page or a spreadsheet. I'm glad I'm out of that world now, because you don't really want to be globe trotting very much after 30. The glamour soon wears off, believe me. So this is the point. He will be coming on, and he will be telling you what's actually happening on the sharp end. Who's buying, who's selling, and what the situation is. And I think you'll find it jolly interesting. See what you think. Have a look at it, and I think you'll gain much. Because I know a lot of you have been emailing me and messaging me and saying, what do you think the position is? What is the game at the moment? And of course, timing is everything. I haven't a clue. Don't know. I can't tell you when something is going to happen. Nobody can. And count the spoons if they do say that they can. But what I can tell you is we're in a strategic position. And if you are patient and you hold your course, you'll do very well, as indeed I have done basically in the last 30 or 40 years in my portfolios. Because I'm a patient man. I'm a patient fellow, and patience pays the bills. Right, greetings everybody. As I said, I've got Nick Ward back on the channel because specifically because there's some things going on, and people are asking me about things, and things are going on which we need to be talking about, and it's a little bit on the hurry up because China's a main player now. China's come in, they've always been in, but now there's all sorts of things happening. And Nick's been wearing out a bit of shoe leather globally. I've been here and there as well. So we need to pass on as quickly as we can the information that we have to you. So Nick, can you just fill us in about the Chinese play at the moment, which seems to be the global thing, everybody's talking about?
Yeah, before I come on to that, Godfrey, it really is, and that's why we're on the podcast right now. But to give it a bit of background, the markets are just so contradictory at the moment, which I suppose is the most telling thing about where we actually are at the moment. Because on the one hand, you've got the financial press saying the gold rally is over, the trade's done, move on. And then on the other hand, you've got the most powerful financial institutions on earth buying gold at a pace we've never seen before. So the question I always ask to people is, well, who do you believe? The commentators or the people actually moving trillions of dollars? And I have to say the timing of this conversation is almost uncomfortable, because tomorrow morning, something happens that can't be undone. So 6 of China's largest banks simultaneously are going to shut down retail paper trading permanently. This isn't a trial. There's no reversal clause. So whatever the gold market looks like on the 25th of July is going to be a very different market to the one that exists today. So ICBC, the largest bank on the planet, is among them. The Postal Savings Bank of China, They moved first, I believe. Then Ping Bank, and then more of them have followed. They're all doing it at exactly the same time in the same time window. Now, the official line here, Godfrey, is that they're doing this to protect ordinary Chinese citizens from gold's volatility. Um, and as we know, look, gold has been on a wild ride. It hit $5,600 an ounce in January. Today it's sitting around, what, 4,100. That's about a 28% dip. It's not been fun, and a lot of people have been hurt by that. So the story is the banks have stepped in to protect them, which is all very nice and neat and tidy and a reasonable sounding thing to do, of course. But that's really not the case at all. Six of them have shut this off entirely. Another two banks, Bank of China and CTEC, they've taken a slightly different approach. So what they've done is raised margin requirements up to 140%. And that sounds technical, but what it means in plain English is they've made it now so expensive to hold a paper gold position that almost no one can afford to hold it. It's a very polite way of just doing exactly the same thing. So by hook or by crook, they're shutting down paper gold trading. They're pricing people out of the market. And they're all doing it at exactly the same time. So I do not buy this official story for a second. And when the biggest banks in the world coordinate like this, it's never really about protecting the little guy. Never. And tomorrow is, I think tomorrow is going to be the day China finally starts finding out what gold's actually worth. Because here's the thing, Godfrey, that the price of gold, we both know, the price of gold we see quoted on your screen every day is not the real price. And this is really what I wanted to explain here. And the reason I feel a degree of urgency about saying this publicly is that after tomorrow, the conversation is going to change somewhat. You can still act, but the window is going to close. And this is what people really, really need to be aware of. Look, what it comes down to is, look, the price of gold that you see quoted on your screen every day, that's not necessarily the real price. It isn't. And I know it sounds like a pretty bold claim, but when most people buy gold today, no gold moves anywhere. A bank or an exchange sells you a contract that says you own an ounce of gold, and the bar supposedly sits in someone else's vault. Most buyers never ask for the actual bar. They just want to sell the contract later on at a higher price. And the sellers know that, which means nothing stops them from selling claims on the same ounce of gold 2 times over, 5 times over, 10 times over, 20 times over. And the only moment that fails is when everybody basically asks for their metal all at once. And as we well know, everybody never does. So now ask the obvious question, what does that do to the price? Well, if there are 10 paper claims floating around for every real ounce of gold, the market sees 10 times more supply than actually exists. And of course, more supply means a lower price. And every extra contract pushes the gold price below what the physical metal alone should actually fetch. And in London and New York, where the world's gold price gets set, the vast majority of daily gold trading is exactly that. Contracts that are settled in cash, while the actual metal never ever it never moves. And nobody knows the true ratio of paper claims to real bars. It's really, really unclear. So what's really funny, the most important price in the world is set by a market that can't actually tell you how much of a physical thing that it's holding.
Why? Tell me this, answer this, because this has been coming down the track for a while now. And it comes to fruition, frighteningly soon in the next few days. But I can't understand, and perhaps you could explain this to my subscribers, why there hasn't been a bigger arbitrage position between, if you will, left and right or east and west so far. And how is that going to manifest itself for retail buyers in the market at the moment in the Western Hemisphere?
Oh gosh, to answer that, Godfrey, I suppose Well, number one, they're trying to hoover up as much of it as they can still at these cheap prices while they can. They don't care what price it's sitting at. But I spoke to answer that question. I suppose we've got to look at a bit of history, really. I know before we got on the podcast, you briefly mentioned obviously the 1970s, but if we want to go back to March of 1968, I mean, history really does. I know they say it doesn't exactly repeat itself, but it certainly rhymes. But there was, of course, a room inside the Bank of England where they weighed gold. And that room, of course, became overwhelmed. The United States had been flying in gold from Fort Knox on military aircraft, trucking it in through the back streets of London. You'll remember this, in convoys to the back of the bank. And they were stacking it faster than the men inside the vault could actually weigh and process it. And that operation, it buckled under its own weight. I suppose quite literally, really, and figuratively. But because the US, and to answer the East-West question, because the US and seven European allies had spent years artificially defending a fixed gold price of $35 an ounce, selling their own gold reserves, of course, into the market every time the price threatened to rise above that level. They're actually selling the most valuable thing they own to protect a piece of paper. And then by March 1968, the scale of what was actually required to hold that line had it become completely unmanageable. They just couldn't do it. In a single week, they sold, I think it was roughly 1,000 tons of gold, trying to defend a price the market had basically stopped believing in, long stopped believing in it. The French, of course, you'll remember, Godfrey, they were the first to do the maths. They quietly walked out and started swapping their dollars for physical gold, and then the others followed. So they want to avoid same thing happening again, basically. And in a normal week, the operation sold about 5 tons of gold to hold that price. It was only about 5. In the final week, it lost roughly 1,000 tons. So the floor to that market gave way. And Washington called London and basically asked them to shut down the market entirely. And you'll remember the Queen even declared an emergency bank holiday because of that. And then when the market reopened, the government gave up. So from that day, there were two prices of gold, the official paper price and then the real price that people paid for the physical metal. And then, of course, 3 years later, in the early 1970s, Nixon cut the dollar loose from gold completely. So within a decade, the gold price had gone from $35 to $850 an ounce. So that long story short, Godfrey, the lesson here is, and I think it's the most important one in the history of the gold market, is that when a paper price and a physical reality disagree, the metal is always going to win, always. The central banks know that. And what China is building right now, it's the modern version of that same reckoning. Except that this time it's not an accident. This time it's all completely deliberate. And yeah, of course, they're building something to replace this. And I think if we want to get into detail about that, it can be broken down into 3 parts, really. So part 1, well, that's Shanghai. The Shanghai Gold Exchange requires physical delivery on every single trade. When gold trades there, a real bar has to move from the seller's vault to the buyer's vault. You cannot sell 10 claims on one bar because sooner or later the bar's got to move physically. It's got to physically appear. And a market that built that way can only measure 2 things: how much real metal actually does exist and how badly people actually want it. So that's called genuine price discovery. The paper layer is basically completely removed, which is obviously what we've still got in the West. Now, part 2 of this, Godfrey, is Hong Kong. So China's currency rules make it difficult for foreigners to trade inside Shanghai directly. So Hong Kong is being developed as basically the front door where the rest of the world can buy and sell at Shanghai's physically settled price. So they're opening this up to the world. So international access to a market where real metal has to move on every trade. And that is huge news. And then, of course, part three to this, which tells you everything you need to know about how serious this is. This is so interesting, Godfrey. The gold vault at Hong Kong International Airport is being expanded from around 200 tons of capacity to over 2,000 tons. That's 10 times bigger, all built in advance. So now, Godfrey, the paper markets don't need vaults, of course. Contracts don't take up much shelf space, do they? You only build storage for 2,000 tons of gold if you're expecting 2,000 tons of real gold to arrive, and you need somewhere to put it, basically.
Would within a situation, it's interesting now that of course gold is a tier one asset, which I thought would affect things rather more than it has done so far. Um, would we know that Poland is buying? We know the Polish central banks are buying heavily gold and have been for some time. Where else do you think the metal, the big buyers, because at the end of the day, it's the big buyers that will control this pricing mechanism, the central banks who are still buying. And they think it's Christmas Day because they're buying at these fake, basically buying at fake prices. They're buying at fake prices. So one would imagine perhaps that this would happen rather quicker than movements of this nature have happened in the past. What's your view on the time schedule? I know this is extremely difficult to judge timing.
I think they're going to try and manage it and push it out for a very long period of time because it's not in their interest just to close it. It really isn't because then they haven't got enough gold yet to go back to any form of kind of fully backed gold currency. They just simply don't have enough of the population. So they're going to carry on accumulating it for as long as they possibly can. But they've been telling us this, Godfrey, for a very long time. Just maybe let's just go back for what, 14, 15 years. I think it was back in 2014. The head of the Shanghai Gold Exchange stood up at a conference in London, of all places in London, and said plainly, gold is consumed in the East, but priced in the West. And when China gains influence in the gold market, the real price is going to get revealed. And that was what, 14 years, 12, 14 years ago. Um,
The Swiss franc, the Swiss franc for many, many years, was a relatively stable fiat currency, part fiat currency. I think I'm right in remembering that it was for a very long time. It was back 20%. It had 20% gold backing, but I could be wrong. My memory could be playing me false on that. But I would argue that China now has or BRICS comes certainly Russia, China, and have enough gold to do a partial backing the renminbi and the ruble and so on. I mean, they could certainly move, could they not, to a situation that the Swiss franc had,
mhm.
where it was partially backed,
Yes.
which would be an enormous strengthening given the decline of the dollar and
Yeah.
more sterling borrowed, more gilt sold perhaps globally than a lot of people might imagine. With this bunch of comedians that we've got in London, and of course the EU, and the central bank are basket cases as well. There's nowhere else to run to that I can see, or am I missing something?
No, I think the question is if they do go back to a gold-backed currency, which I think still is a way out, but it's, well, how much do they want to back it by? Of course, in the US, I think the highest it ever officially got to was around about 40%.
Yeah.
But this in 1968, the run on gold was a complete accident. Nobody planned it. But what China has now built is the same event, but they're doing it on purpose. So maybe they do have enough gold. Who knows? Um, but I think the first thing to maybe understand is this isn't abstract. We can already see the smart money behaving in a very specific way. So central banks, they bought about 244 tons of gold in the first quarter of this year alone. In the first quarter. That's the strongest first quarter of gold purchases ever recorded. And the World Gold Council, they openly estimate that a significant proportion of central bank buying never even gets officially reported. They buy it, they just don't bother declaring it. And what are these same institutions selling, as you correctly say, to pay for it? US Treasury bonds, government paper, Godfrey, that's all it is.
Mm, mm.
So gold has now officially passed US Treasuries as the largest reserve asset held by the world's central banks. The people who built and run the global financial system are selling their paper promises and actually buying the physical metal. You don't need to read between the lines there to see exactly what's going on. And what if you look online at the moment as well, there's a figure that comes up in pretty serious analyst circles that I think's worth mentioning. That's $38,000 an ounce. Now, before you fall off your chair, there, Godfrey, that isn't a prediction for this week or next week. It comes from a very specific calculation. So what you do is you take China's annual trade surplus, divide it by its gold imports, and you arrive at the price at which China could theoretically settle that surplus in gold rather than in dollars. So the price at basically which the maths of the global trading system kind of automatically balance, if you like. And it tells you that at today's price, gold is arguably significantly undervalued relative to the scale of those imbalances that would need to be resolved. And that is basically why China, they don't care whether they're buying it at $3,000 an ounce, $5,000 an ounce, $6,000 an ounce. Chicken feed to them means nothing. In the context of obviously where they think it's going, any of those prices basically look like a bargain. And let me leave you with one number that I think this puts it all into perspective, really, for everybody listening to this. So in 1976, 1975, 1976, I think it is, the median American home cost 350 ounces of gold. Today, that same home costs around 105 ounces. In dollars, house prices have gone up, what, tenfold? Whereas in gold, well, they've gone down 70%. So the dollar's lost all the value. It's just the gold price sitting still. So when people keep looking at the price, oh, it might fall 3%. Oh, it might go up 5%. Well, they're missing the point entirely, which is looking at the price of everything and the value of nothing. So gold's been doing its job for 50 years now without anybody noticing. And here's what makes that number even more striking, I suppose, is that that calculation was done using the suppressed paper price, the price that we have every reason to believe is being held below the real value of the metal itself. So the real price is probably going to be even higher, and China's basically betting everything that it is going to do that. So that I think that figure just puts gold's store of value narrative and purpose even higher when you look at those numbers. But when you look at everything together, basically, Godfrey, the 1968 precedent, the paper gold system now, it's cracking at the seams, central banks buying and dumping their treasuries, the Hong Kong vault being built to hold this 2,000 tons. And then tomorrow's shutdown of paper trading across the Chinese banks. These aren't all coincidences that are happening at the same time. They're sequential steps, actually, Godfrey. They've been planning this for a decade. It's been in the making.
Absolutely. Let's leave it there now. My subscribers will want to know. This is on my website. I do lots of this, as you know, interviews. I've done so many over the years. I think at the moment, just at the moment, people probably would want to speak they'd go via my website all the time, but they would want to speak direct to you or one of your colleagues. And I'll leave the link here. So you can press the button immediately, because this is I'm a strategist, not a dealer, and I think at the moment people are going to want to talk actually to a dealer. The strategy's laid down. We know what the strategy is, and it hasn't fundamentally changed. This is a long-term game, and patience is required. But I think people, if they're going to put their toe in the water, newcomers, might want to just speak to you personally, or maybe Dan, your esteemed colleague, of course, is who my family deals with. I know a lot.
Yeah,
Yeah.
please do, Godfrey. Get anyone can give us a call, drop us an email, click on the link below on this video. No obligation, no pressure from us. Just an honest conversation about whether owning physical gold makes sense for your situation, as opposed to just fake paper fiat sat in a bank inflating away to nothing. And look, we work with people right across the spectrum as well. Whether you've just got £10,000 that you're looking to protect, or whether you've come into a ginormous inheritance or selling a business, whatever it is, everyone needs that protection. And I'm just saying, at the moment, don't leave it too long, because this is such a significant event.
Thank you for that, as always, dear boy. Thank you very much indeed for that. Well, there we are. We can't do more than that. We've given you the information, and by all means, act on it if you wish. And again, my website is there. A lot of background information. It's all there. But if you want a personal conversation, give them a bell. And good luck with it. Certainly, if I wasn't so damn skint at the moment, I'd certainly be buying these prices. But I'm I'm a bit skint at the moment, and I'm fully invested anyway. So there we are. But thanks again, Nick. Thanks again for coming on.
No, pleasure. Always a pleasure, Godfrey.
Just a reminder here, Nick and his senior colleagues are always happy to talk to any of my subscribers. And very nice fellows, you can tell from the interviews. They have a policy of buying back when they can your coins at spot price of gold. That isn't always possible in the long term, but that is their policy at the moment, and it's what they really do try and stick to it. But force majeure sometimes in international markets, and bear in mind the cost of spot price of gold changes every 5 seconds globally. It's an international globally thing. Sovereigns, of course, are internationally recognised throughout the world, especially in the British Commonwealth. They've been around since 1817, so they're very good coins. They do vary a little bit in quality, so on and so forth, but again, the policy is you will get a quality coin, and of course, which is free of capital gains tax. Gold coins, the coin of the realm, free of capital gains tax and VAT and all the rest of it. All of which, of course, you know from my website. Just one thing, other thing I mention. Nick deals with me and my family. There are other dealers I use as well, myself and my family, but Nick is the main one, and people sometimes ask me, it's a very complicated game, and where do you go and all the rest of it. Plus the fact he gives advantageous rates to subscribers on holding custody. If you want him to hold them in custody, or his company to hold them in custody, it's a very good system, and it's very competitive. And I've investigated it, and that's a dark art in its own right, believe me. I can recommend Nick and his company, Great Bullion Partners, if you wish. But I'm not a dealer myself. I can't deal. I don't want to deal. I've no interest in dealing whatsoever. But people do ask me, so make your own judgment. Read my website. Be an informed buyer at all times. Read my website. It's the most comprehensive website in the country, and it's independent and not for profit. There we are. I'll leave it with you, and good luck. And if you do ever come across something you think I ought to know in any way, please give me the heads up. I will be very grateful. As most of you know, my work is very heavily independently research based, and I get my information from all over the world. It would help if you press the subscribe button and the little bell next to it, because the more subscribers I have, the more likely it is that international independent research institutes will share their material with me. It's most helpful, and then of course I'll automatically share it with you. So surprise, won't cost you anything. Thank you very much.